All right, welcome everybody. I hope everybody had a wonderful weekend. We're gonna, I gotta admit, it's good for New York sports. Just saying, Jets Giants. Holy cow! I can't believe it. And well, the Yankees got to win another one here tonight. Anyway, let's get into things. I want to start off today talking about some of the bigger picture macroeconomic things that are happening around the globe. You had, again, the International Monetary Fund getting together, having their little chit-chat regards to the global economy. And obviously, thank you, masters of the obvious, higher inflation darkens global economic outlook. Yeah, Kristalina Georgieva, the IMF managing director, the worst is yet to come. It's like the opposite. It's the bizarro Frank Sinatra. The worst is yet to come. Yeah, that's what they're saying. Across many economies, recession risks are rising. The U.S., European Union, China will stall, and obviously that will affect all of the emerging markets around the globe. We've discussed this here on the podcast and how the strengthening dollar hits a lot of these emerging markets. There's now some conversation out there on how they're going to go about helping them. Again, these are all big government types. They believe in centralize this and centralize that. Maybe not to the extent that Xi Jinping was talking about this weekend in China, but not going to work that way. Again, the private sector works every single time it's tried. Quite frankly, everybody's cheering this about face that has taken place in the UK. You know, it's the news today. New Finance Minister scraps all of the lower taxes and reforms that were put forward. So you're telling me higher taxes is the answer? Higher taxes is going to solve your problems there in the UK. Higher taxes is going to help your country out in regards to its energy supply. No, these are all self-inflicted wounds. Again, the UK is going to have to send out checks, and lots of them. Lots of checks to people out there just so they can get by this winter because energy prices are just that high. Again, I'm a big believer in working on the supply side of the equation. Having funds getting money into the hands of the right people, which is the private sector, the people that actually build and create and truly hire people, rather than the state, to me, is what you need to have happen. Okay, they're pulling back from that. And again, the conventional wisdom, we talked about this last week on the program, is that it was Liz Truss's fault. These tax cuts, this is what screwed up the whole gilt market and messed around with this liability-driven investments. It's some $2 trillion. And these esoteric investment schemes that they put together. No, these things came about. This came about over time because you had artificially low interest rates for an extended period of time. Again, talk about time. It's going to take some time to work its way through, especially in Europe, where they had negative rates for an extended period of time. So again, I'm not a big believer that Liz Truss is to blame for everything that's taken place. If that was the case, I mean, geez, look at Japan. Japan wasn't going to lower taxes, yet their currency fell off a cliff too. Their government had to step in and start, buying up their currency as well. I mean, come on. So tax cuts is the reason. Sorry, again, narrative, conventional wisdom is poison. Once again. Yes, Xi Jinping, big Communist Party shindig, basically telling everybody what they're planning on doing. Again, he is the most powerful figure since Deng Xiaoping in China, without a doubt. They have created a surveillance state that rivals anything in world history. We all know that. We've seen what their COVID lockdowns have done, what their continued COVID lockdowns have done, and they have pushed away from many of the free market reforms that worked and were working. They did talk about the need to, again, re-engage with Taiwan. They said they want to do it in a peaceful manner. Okay, we'll see what's going to happen. I've said this before. This type of governance will fail eventually. It's failing now. I mean, we actually cover this stuff on the program. You talk about the real estate collapse that is ongoing in China. Their inability to build and create things like we're able to do. Now, we talked about this. They're catching up to some degree, but now countries are starting to push back. Companies are starting to push back and say, hey, you know what, we're not going to transfer all of this technology that you want. Centralized government, centrally planned economies fail every time they're tried. Every time they're tried, they will fail. So again, they can try to pull us. They were, for all of it, they're what was it, that Silk Road thing that they were pushing from around the globe, and they were lending out all of this money. Many of these countries are like, no, we can't afford to pay that money back now. They're pulling back for many of these investments. Now they've got another vision for, 2050. Again, centrally planned economies don't work. It's the same concept thing that we yell and scream about here on the program when it talks about, ESG investing, or when our government decides, hey, we've got to go all in on green technology and EVs, and you start subsidizing certain industries. Again, because we're also guilty of this as well. And we're feeling what? The repercussions because of all the centrally planned government nonsense trying to push us in a certain direction right now. We're feeling it at the pump. We're feeling it in our grocery bills across the line. That's what happens. Anyway, real estate market. Buyers are backing out. Buyers are backing out. A chart here. 7.9% of listings had price drops. It's a 4-week rolling average. That's pretty high. This is from Redfin. 4% of homes having their prices reduced each week over the same period a year ago. Data has gone back to 2015, and they've never been this high. They're just getting started. They're just getting warm. Again, when you have mortgage rates go to such an extreme level over such a short period of time, again, it takes a little time. And a lot of sellers in homes are oftentimes not realistic. They're not. It's the same thing with people with stocks and portfolios. Because their house, they could have sold their house a year and a half ago for $300,000-$400,000 more. They believe that magically is going to come back overnight, where it's not. Most certainly when you're having rates this high. And again, we've gone over this here on the program. Mortgage rates play a kind of a big part when it comes to the home purchasing process here in the United States. It's not so much the price of the home, it's what your monthly bill is. It's reality. It's what your monthly bill is. Certain parts of the country where property taxes are high, well, guess what? The owners of the home, they got to factor that in to what they're buying. How much are my taxes going to be? What's my monthly bill going to be? Now, granted, there's still a lot of all cash buyers, certain areas of the country, but that's slowing down too. So, my humble opinion, we still got a major correction in real estate to the downside. And again, it's not necessarily a bad thing. It's not the end of the world. I know people trying to sell their home. This is terrible. This is awful. Come on. If you've been in your house, 5, 10, 15, you're still making money. So stop being greedy. Okay? You're still making, you didn't top ticket. Well, shucky darn. It happens. It's a whole thing people fail to understand. You're never going to get in at the exact bottom, and you're never going to get out at the exact top. It's what you make on the in between. And even if you are selling your home and you're going to get a little bit less, well, guess what? Normally, where you're moving to, you got to live somewhere. You're not a bat, can't hang from a tree. Guess what? You're going to be paying less for that. So it's a wash. Okay. It's kind of a fascinating piece, a bit of a think piece I want to get in today. Again, I mentioned here on the program, we're equal opportunity bashers here at the Watchdog on Wall Street radio show, podcast. What we do, we go after both sides. And I used to be a member of the Republican Party. I left, this was back during the George W. administration. I just got sick and tired of the BS. I got sick and tired of being lied to, promises made and promises not kept. And I know everyone's all excited talking about these midterms and Republicans coming in and oh boy, what will it mean if they take the House, if they take the Senate, or now there's conversation, it's going to be a 50-50 Senate. I don't know. I don't know. But the Republican Party, and I'm taking a look at the ridiculous I can't even remember the name of it. It's not Contract with America. That was Newt Gingrich's thing. It's something similar though. It's nothing but it's like a Christmas list that a kid would write, for crying out loud. There's no details in that at all. The Republican Party has gone the way. It was an interesting piece today. They're talking about how they've basically become New Deal liberals in many respects. And this is stuff that I've lamented here on the program. You got a lot of Republicans out there that continue to push for the welfare state and child tax credits and more help for younger families. I'm like, what? Are you kidding me? And again, I didn't sound harsh here. And again, I have no problem with social safety nets. I made that perfectly clear. But if you can't afford to have kids, you probably shouldn't have them. Is that so wrong, me saying that? You can't afford kids, you probably shouldn't have them. I mean, if you can't afford a boat, you probably shouldn't buy one. Should you expect your fellow neighbors to pay for your boat, even though you can't afford it? And you're going to expect your neighbors to help you pay for your kids? I just don't understand it. I can't get my arms around it. And I understand things happen from time to time, and that's what social safety nets are for. But it shouldn't be an entitlement. Oh, you're making under X amount of dollars, you're going to get X amount per kid. Are you out of your mind? Kids are an enormous sacrifice. You have to make enormous sacrifices to be a parent. If you're not willing to do that, well, then you probably shouldn't have kids. But again, this is a lot of what the Republican Party has become. They've kind of just gone with the flow and accepted this. In this piece, it was interesting. They were comparing what FDR was doing and how he was pitching the New Deal and what current Republicans are doing. The National Conservatism Conference that took place in Miami last month has generated a lot of attention and hand-wringing, especially from self-identified anti-Trump conservatives who don't like the direction their movement is taking. In their view, the new national conservatism, with its populist rhetoric, advocacy of government regulations of corporations, favorability to the welfare state, and appeals to religious values and the white working class, is apostasy from the true conservatism they supported during the Reagan era. But national conservatism isn't a turn away from true conservatism because such a thing doesn't exist. Lacking any essential core, conservatism has always evolved and always will. A self-conscious movement operating under the label conservative began in the 1940s with combating the New Deal, then moved over to anti-communism efforts, then, greater military intervention, and then 1970s more Christian social values. It's taken a lot of forms. What are they trying to sell at this point in time? And again, I talk about this all the time. That's why I'm not a Republican. Okay. I believe in the United States Constitution. I believe in looking to the founders and what they had laid out. I believe in the 10th Amendment, that states should have rights and we should be governing on the local level. And we need to pull away from this centralized government that we've created and everything that goes along with it. I mean, all of the things that were created under the Bush administration after 9/11 that are still around, that we're still utilizing, all of these things, the size of government, how it has grown since that period of time. It's always been a growing thing, but that put it on steroids. We need to go in the opposite direction. I mean, last week on the program, we talked about all of these bureaucrats in Washington, D.C. trading stocks and making investments based upon their position of power and what they know. It's not a good place we're in. And Trump talked about draining the swamp. Probably shouldn't have talked about it. Probably should have just have done it. But again, it's not an easy thing to do. Anyway, speaking about this crap again, go sell BS somewhere else. Quite frankly, you got the Atlanta Fed president there, Raphael Bostic. He improperly disclosed his financial said that the stock trades and the things that he was doing. And he claimed he didn't know. Let me ask you a question. Do you think that if I acted in the same fashion, again, I am overseen by the Securities and Exchange Commission. Do you think if I did something like that, we here at Markowski Investments acted like Raphael Bostic did and used our position, insider trading? There's a myriad of things that we're just not allowed to do. Do you think I'd still be around? Do you think I'd still have my business? No. Now, again, you go to the old Orwell. Some animals are more equal than other animals, and the fact that this guy, that you're a PhD in economics, and you don't recognize that you have to disclose all of these trades and the things that you're doing. Are you serious? I mean, you expect us to believe this? And mark my words, this came out on Friday. I learned about this Friday afternoon. Certain stories are dropped at certain periods of time for a reason. For a reason. It will be forgotten more often than not by Monday because people are talking about their football team. It is what it is. Inflation. Americans are getting poorer. Price inflation grew faster than wages again in September. Yeah, we know this. However, I was actually interviewed several occasions this past weekend about this. The core inflation, the CPI, almost 40% of the core CPI has to do with real estate, has to do with housing. And that's lagging. That number is not accurate. That number is coming down, and it's coming down fast. And I actually got to see my mentor, Jeremy Siegel, guy I have a great deal of respect for. And again, I highly recommend you reading his books, Wharton Professor. Same thing, echoed what we were saying for a while now when it comes to the CPI. It's the same thing this morning. It's the number's not accurate at this point in time, and it's going to take a while for it to show up. But we all are seeing. You take a look at the actual data in the here and now. Sometimes these reports are like telling you the weather from a month or two ago. What good is that? You need to know now whether or not it's raining, correct? Not whether or not it was raining 2 months ago. Big issue this winter, and I don't. These numbers are, yeah. And again, you'll see it. You'll see it. You'll see politicians standing on opponent. We got to do something. We need to help people out. This is not right. This is not fair. Yeah. Households that heat with oil or gas to experience an increase in cost of 28% this winter. 28%. It's a lot of money. I mean, let's be honest. This is such a lot of money, people. That's a massive increase. And there's nothing the Fed can do about it. The Fed can't change the weather. The Fed can't drill for oil. The Fed can't go out and frack for natural gas. What the hell is interest rates going to do? I mean, it's awful. And it's so unnecessary. Well, you had Biden this past week. He was in Los Angeles, and somebody said something about $7 a gallon gasoline, which is, I guess, that they're paying in Los Angeles. And he's like, yeah, that's always been the case. Really? It's always been the case. Anyway, finish up on this story. And this is sad. It really is. Wawa. Are you familiar with Wawa? Now, it's kind of started in the Northeast, started in Philadelphia. Started in Philadelphia, was popular, and it grew. It's a 7-Eleven. All due respect, it's 1,000 times better than 7-Eleven. It is what it is. It's a nice gas station / mini market. Where they were founded in Philadelphia, Wawa is calling it quits. They are closing 2 more of their Philadelphia stores simply because, what's the point? They're just getting ransacked. They're just flushing money down the toilet when people can come in and take and steal and grab whatever they want, and nothing's going to be done about it. Yeah, it's chaos, people. That's chaos. I mean, this is something that's important that we really need to deal with here in this country. You need to have some semblance of law and order. Hey, Wawa, national chain, hometown. Nah, we're out. It's not worth it. Sad. Anyway, have a great day, everybody. WatchDogOnWallStreet.com is our site. Again, take advantage of all the great stuff that we have there. WatchDogOnWallStreet.com. We'll see you.